Good evening and welcome to another episode of the Weekly Market Wrap. My name is Danny Ang, and of course, today is December the 8th, and let's get started. Uh, of course, I have to acknowledge the sponsor IronFX. This is a broker that has been around since 2010 with operation in over 180 countries and offering various instruments for trading to the tune of 500 tradable instruments. And they have been sponsoring my event for quite some time now, and I want to acknowledge and to show my appreciation. And of course, this is a presentation and it's not an offer to buy or sell any kind of securities, be it FX or CFDs, and it must not be construed to be investment advice. And the trading of any kind of margin products to carry risk, to understand your own risk profile before you attempt to trade any kind of margin products. And the views I'm going to share with you are mine and has got nothing to do with the sponsor for this event. And collectively, we are not taking any responsibility for anything that you may do after this presentation. And of course, the content of this presentation has not been vetted by any regulatory body. And this is something that you have to be aware of. Now, let's get started. Now, we have a few major geopolitical events that have unfolded this past week. In fact, since the beginning of the month itself, we have been hearing that Syria now is in a civil war. In fact, the civil war is nothing new. It has been ongoing for 15 years since the start of the Arab Spring. Now, if you remember 15 years ago, we've seen the fall of Libya. We've seen the fall of many Arab states in North America, North African states in the Middle East, and Syria has been in a state of a civil war for the last 15 years, and there are big powers involved here. And of course, news this week is that the rebels, so-called rebels, has actually launch an attack, and in just 3 short days they have managed to take major cities in Syria at the expense of the Syrian government run by Assad, okay, who is the son of the previous Syrian president, and he has been uh, defending his other half of his territory. The other half now has been mostly in U.S. control. And we all knew that this Arab Spring has been ongoing for some time, and this event that happened this week, including this morning itself, is probably a continuation of that Arab Spring campaign. Now, we also hear that the Russians has an interest in Syria. At the end of the day, we all knew what happens in Syria. It's not so much of a civil war, but I think it's fighting for control over a pipeline that runs across Syria and towards Europe. Okay, we all know that the United States has been trying to build their own pipeline from all the way in the east towards the Bulgarian territories, and this is the pipeline that I think is where I think Syria has found itself in the crosshair, and this has been the situation since then. Okay, and of course, we also knew that Donald Trump has once again issued a threat that Hamas needs to release the remaining hostages, of which he says that if by the time he assumed the White House on January the 20th, and if this is still not resolved, he says they will be held to pay, although he did not elaborate what he means by that. And we want to see what happens, okay? And as far as the economic is concerned, we can see that the Fed chairman this week on Wednesday has actually came out to make a statement and say the U.S. economy is in remarkably good shape, and there is now that possibility of bringing interest rate to a more neutral level. Not sure what a neutral level means, but I think he's hinting that maybe there will be a pause in the interest rate cuts since September 18, when the Fed actually cut interest rate by 50 basis points, and then again in November last month, where he cut another 25 basis points. The next FOMC meeting is going to be next Wednesday, Thursday, and market is expecting another 25 basis point cut. But going into 2025, I think there is expectation that the Fed is in a mood to actually slow things down. So possibly in the first quarter of next year, we may see a pause in the interest rate cuts. So the market is more or less pricing in the possibility. So you also need to be pricing that into your portfolio as well. Okay. Then we also knew that the French government actually collapsed. Now this government has been installed, or rather the prime minister has been installed for only 3 months, ever since Macron, the president of France, actually lost the EU election, and since then he has lost the majority in parliament, and his previous prime minister was forced to resign. And this prime minister has only been in the office for the last 3 months, and he too has been has been forced to step down since he didn't survive a vote of non-confidence when he tried to push through a budget without going through parliament, and that has actually caused the collapse of the government itself. So President Macron would be under pressure to appoint another prime minister, saying that he is not going to resign, although he does not enjoy majority, because in French politics, the presidency and the prime ministerships are separate powers, and so there is no need for the president to actually resign, even though the support that he is currently receiving is probably one of the lowest we have ever seen since he became president. So there is still no update as to who will be the next prime minister, and that will be a concern because this is the second major economy that has actually collapsed in terms of government. The administration has collapsed. The first was, of course, Germany, having collapsed within hours of Trump declaring victory on November the 5th. So this is the second largest economy in Europe, and it looks like they are collectively between Germany and France, being the two strongest economy now, is on tenterhook, and there is it looks like politically, the entire Eurozone or EU is drifting with no clear leadership. So we will be watching its development, but it suggests that Europe is going to be marginalized as the months goes by. Ever since the start of the war in Ukraine, you can see the prominence of the EU has been seriously and negatively being impacted. Okay, we have seen the industrialization having happened in Germany, and this is still ongoing. The union in Germany, or rather the Volkswagen union, is threatening to launch a second round of protests against Volkswagen plan to actually close 3 plants and to lay off thousands of workers in the auto industry. So we can see that is negatively impacting the entire Europe zone. Okay. So this is the situation we are seeing here. We've seen the mass protests by the workers' union from the Volkswagen factories. We can see that this is the first time Volkswagen has actually closed factories. They have been around since the Second World War, and this is a major event because not only is Volkswagen threatening to close 3 plants, they are also looking to retrench as well. So it's going to be showing us that Germany auto industry is definitely in serious trouble. Not only in Germany, we also hear this week that Nissan CEO is also saying that unless they can find new investor within the next 12 to 14 months, they may be forced to shut down as well. So we have Volkswagen, a major brand in Germany, and Nissan, a major brand in Japan, all telling us the same story. I think they have missed the EV revolution altogether, and now they are paying the price. Okay. And of course, the latest news we have this today on Sunday is that the Syrian government has reportedly collapsed. There is no news on the whereabouts of Bashar Assad, which is the president of Syria until hours ago. And there was also a separate report that said that a plane belonging to him has crashed somewhere in Syria, and there is no confirmation whether he and his family are in that plane itself, but the plane has gone down. So there is the possibility that we are beginning to see something new develop in the Middle East right after the ceasefire between Lebanon and Israel. And so far, we knew that the ceasefire has been violated a number of times by both sides, and I think that is also shifting focus to this part of Syria, which behind the scene has been a interplay of four powers between Turkey, United States, Israel, and and Syria. Okay, so we can see that earlier on I did allude to the possibility that the war in Syria is all about that pipeline. If you want to know more about this story, you can go and Google Syria pipeline, and this has been an ongoing theory that the fight in Syria is all about building that pipeline that will link the natural gas from the eastern part somewhere in Qatar, okay, to be piped all the way to Europe via Syria territory, okay. So this is something that will also involve Russia because Russia has a vested interest, and they have been on the side of Syria trying to maintain some kind of a balance. With this latest news, it would seems that Russia has lost, and that will dramatically influence their influence in the Middle East. So we will be seeing how this thing unfolds, but it could be something big. Now, this is the pipeline story that I managed to Google, and this has been ongoing for some time. Russia actually control a certain part of the gas field because they have invested in that pipeline, and now that the rebel has actually gained control of Syria, it will means that Russia runs a possibility of actually losing control over the pipeline to be replaced by a U.S. Influence pipeline. So this is something that we want to be again watching. It's all about the natural resources and the natural gas. So we're not sure whether the market will react tomorrow morning in the energy markets as far as natural gas and more importantly on crude oil, but I suspect there will be some repercussions. So if you are into energy and have open positions or looking to open positions, look out for the market reaction early tomorrow in Asia, okay? As far as statistics is concerned, we can see that the retail sales for Australia came in a lot higher, which is a good news because we can see that for the month of September, the retail sales month over month in Australia was only 0.1, practically no growth, and the market was expecting an improvement to 0.3, but it came in double of that to at 0.6. So this is definitely a good news to be chilled, and definitely I would believe Australia dollars should react to this piece of news or will continue to react to this news as the weeks goes by. Okay, over in China, we can see the manufacturing PMI is actually better than expected. Market was actually a borderline case at 50.3 for the month of October. It came in at 51.5, better than the market expectation of 50.5. So this is one of the highest reading as far as the manufacturing is concerned over this 2024 period. So we can see the highest was 50.8, and at 50.5, there is a possibility by the year end in December, this number could actually be possibly challenging the high for the year at 50.8. So this is definitely going to be seen to be good news. So added to the possibility that China may roll out new stimulus package in 2025 in expectation of Trump's return. So that could actually underpin the equity markets in China and in Hong Kong itself. So this is definitely pointing in the right direction. As far as U.S. manufacturing PMI is concerned, it's also showing to be a better number. We can see that it is still underwater because it's still under 50, but it is definitely one of the better numbers that we've seen so far this year. Over the last 5 months, you can see that the PMI numbers for manufacturing have been hovering below 47.2, and this is the first time it actually broke above that number to be at 48.5, 48.4, which is on the higher end of the year performance. So if this trend continues, there's hope that we may see a rebound in manufacturing when Trump returns. Australia GDP for Q3 is being revised downwards. Market was expecting 0.4 from the previous number from Q2 of 0.2. Now it is at 0.3. It is better than Q2, but it was not as robust as what the market was expecting. So it somehow negated the stellar release for retail sales that we see at the beginning of the week itself. Okay, so this is the services PMI. This is definitely not something that we want to cheer. Although manufacturing has actually rebounded somewhat in China, we can see that the services PMI has actually dipped back from 52. Now it's at 51.5. Market was expecting 52.5. So this is not a very robust number, but it is not the end of the it's not the end of the story. So we still have one more month to go before the year is year ended for 2024. But based on this, we can see the services sector in China is still chugging along, although it is not really growing in a very robust manner. The employment situation in US has seen a somewhat downtick. Previous month of October, we see 233,000 jobs created, and this number has actually slid back to 146,000. So this did not actually lead to a feel-good situation as far as the non-farm payroll that was released 2 days later. But we can see that as far as the private employment is concerned, it seems to be losing some kind of steam. Okay. Now, the services PMI has actually gone from bad to worse. We have seen a very robust number for October to 56, which is the best we have seen in the last 2 years. Now, that number has come back to earth. Currently, it's at 52.1. Market was expecting only a minor dip to 55.5. So this is definitely a disappointment, unwinding the feel-good sentiment that we saw in October. So November has been a letdown. This has been the situation in which if the services PMI comes down, even though we have Thanksgiving, that is definitely a concern because we are definitely in the middle of the festive season, which usually should see a growth in the services PMI. Again, we will want to see what happens for the month of December. Again, this is definitely not a good development. In Australia, we can see that the trade balance has bounced, but it is still very, very weak, below $6 billion. We can see last year, the average number has been around $10 billion. And we can see that Australian economy has been on the lower end. For the much of this year, we can see that it is hovering at about $5 to $6 billion. Now we are hovering of just under $6 billion. So yes, it has been an improvement, but it is nothing to cheer so far because the trade balance still reflects that Australian economy is still pretty weak, comparatively speaking. Retail sales in the Eurozone has actually dipped back from 2.9%, which was revised upwards to 3%, but the number that they were expecting was 1.7. It came in slightly better than 1.7 at 1.9, but still we can see from 3% down to 1.9, it is definitely moving in the wrong direction. So retail sales is pretty weak. Like I said, this is going into the festive season, and if retail sales remain shrinking, that would not be positive for the euro or for the equity markets going forward. Here we have GDP, euro areas, no surprise here. It remains within expectation. Q3, quarter on quarter for euro area, GDP remains at 0.4% on a year-over-year basis. Q3 was 0.9%. We can see year-over-year, we can see the improvement from zero all the way to the current number of 0.9. So it does seem that it is rebounding, but it is still below 1% overall. So yes, it is something to cheer, but it is still showing us that GDP is not very, very robust. It is still sub 1%. So this is not fantastic numbers, but it is a lot better number than where it was 4 quarters ago. Canada employment situation, we can see a major uptick in the change in employment. We can see from 14,500 jobs, now it's at 50,500 jobs being created, which is double what the market expected. So this is something good. However, unemployment rate has been stuck. Okay, this is supposed to be 6.5%, not the 0.9 that we see here. I somehow managed to get this number wrong. 6.5%. So it remains stable at 6.5%, but it is still very, very elevated. Over in the US, we can see the average hourly earning has actually plateaued. We can see the average hourly earning is only 0.4%. So there has been no major increase in the wages of the average American workers. Year over year, we can see it's stuck at 4%. So 4% in terms of real inflation, real earnings, if you minus off the CPI numbers, is definitely positive, but it is only marginally so. We can see year over year, we can see the market has actually bounced back. The earning of the average American workers have bounced, okay, to 4%, but it has not been climbing since. So this is something that the American workers have to worry, because it does shows that while there are jobs aplenty, the wage on the average has not really climbed significantly. Okay. Non-farm payroll, we have seen a revision. You can see that the previous month it was reported to be only 12,000 jobs. They increased it by 3 times to 36,000 jobs. So this is a much better number. This, of course, is on the back of the twin hurricane that have hit the southern states. We have Hurricane Helene and Hurricane Milton hitting the Florida coast back to back in October. So that has resulted in quite a number of jobs disappearing, but you can see that the jobs creation has actually bounced back very strongly to 227,000 jobs, although the market was only expecting a gain of 200,000 jobs. And unemployment rate has once again tipped up. Unemployment rate, the highest this year, is at 4.3%. It went up to 4.1%. It stayed there for 2 months before we see the latest upward revision to 4.2%. So it does shows that unemployment is definitely a gaining pace in the United States. If this actually shoots beyond 4.3% and it stays up above 4.3%, it will lead to a recession, because previously I did mention, historically speaking, persistent unemployment rate above 4.3% has always never failed to produce a recession. So if the unemployment rate continues to climb, there is a possibility that the interest rate cuts that we are seeing as a result of a weaker employment may actually prompt the Fed to actually continue to ease. But however, the current sentiments did price in one more rate cut this year in December, which is next week. But that could be all for now until we receive new signals from the Federal Reserve. Some of the Fed presidents has actually been mentioning that they are very prepared to revert back to higher interest rates should the economy slow down. So we do have signals from some of the Fed presidents that they say that they are looking towards actually slowing down the rate interest rate cuts. So this could be something that we want to watch going forward. As far as sentiment is concerned, this has been rising for 6 months in a row. We can see Michigan Consumer Sentiment Index has been rising from a low of 66.4 to the current high of 74. And this is definitely one of the better numbers over the last 6 to 8 months. And this is possibly reflecting the confidence of US consumers. If you want to look at the US equity markets and see whether, because equity markets has been on a tear this year, that could actually spill over into the feel-good sentiment among American consumer. Whether that is the case remains to be seen, but I think so far, as the Michigan Consumer Sentiment Index is concerned, it does suggest that American consumers are a lot more confident today than 8 months ago. All right, going forward into the new week itself, we are moving towards the year end. As we move closer to the middle of the month, which is next week, things will slow down a little bit. Okay, and as far as economic data are concerned, we're going to kick off the tomorrow with the GDP estimates for Japan. Market expect no change in the estimates from 0.2. Market is expecting 0.2%. China is going to release the CPI numbers. They're going to expect an uptick in CPI numbers from 0.3 to 0.5 on a year-over-year basis. On Tuesday, we're going to see the Australia, the Reserve Bank of Australia may be deciding to hold interest rate unchanged. There has been a bit of a reluctance by the central banks in Australia to actually cut rates until maybe into the second quarter of next year. So for some reason, they are definitely not willing to cut interest rate for fear of reigniting inflation. Okay, and Germany is also going to release the harmonized index of consumer prices year over year, expect to remain unchanged at 2.4%. Then in the US, this will be the big number to watch out for the coming week, will be the CPI numbers. We have the month-over-month headline numbers expecting to be unchanged at 0.2%, and then the core month-over-month number to be also unchanged at 0.3%. The one that we want to watch will be the year-over-year headline numbers for CPI for November, expected to inch up to 0.7 from 2.7 to from 2.6%. Then the core CPI will be the major number to watch, expecting to be unchanged at 3.3%. And again, we will be expecting another central bank, this time in the Bank of Canada. This time market do expect them to cut by 25 basis points from 3.75%. And into the second half of the week, we're going to be also hearing from Australia in terms of their labor reports. Employment change expected to be positive from 15,500 jobs, 25,000 jobs. Unemployment rate expecting to inch up a bit from 4.1% to 4.2%. Then again, we have another major central bank. This time will be the European central banks deciding on interest rate. Market do expect them to cut rates again. The main refinancing operation rate is expected to dip from 3.4% to 3.15%, whereas the rate on deposit facilities expected to be down 25 basis points from 3.25% to 3%. Then it will be another major inflation numbers. This will be the core producer price index, expecting to also inch up from 3.1% to 3.3%, calculated on a year-over-year basis. And the last number to be released will be on Friday, in which will be the Japanese Tankang Large Manufacturing Index, very similar to a PMI numbers, expecting to dip from 13 to 12. So this is all that we are going to be expecting in the coming week. So now let's go into the charts. Now, if you have any question, do feel free to post them into the Q&A. So I will address them as we go along. All right, I want to show you as usual, we're going to start off with US equity markets. Now, my charts are all over. Okay, now this is the monthly time frame. You can see the monthly time frame. We have no new high so far for this week, but it was very close to the all-time high at 45,079 in the monthly time frame. Now let's go down to the weekly to get a better sense of where the market is heading. Now this is the weekly time frame. Again, we can see there's only one color, and this color is suggesting that this market remains very, very bullish. We have no new high for this current week itself. The highest traded was last week at 45,079. So this is the weekly time frame suggesting that the bullish sentiment in US equity markets, especially the Dow Jones, remains very, very positive. Let's take a look at the daily. The daily has a counter trend, very, very minor counter trend in place. This is not indicative that the market is going to turn around, but it does suggest that there is a little bit of light profit taking going on. I don't expect this to result into a major reversal, but that is evident that the market is playing cautious as we are moving towards the end of the year. Profit taking post the middle of the month will be quite normal. Okay, so expecting prices to remain elevated going to 2025, but there will be no expectation of a major reversal just yet. Okay, but the market is definitely very elevated. So with this, you want to be aware that the prices are very, very high right now. Okay, now we take a look at the S&P 500. On the monthly time frame, is very similar to what we are seeing in the Dow Jones, very elevated. We have new highs traded for the month of December. Okay, so far the high is just under 6,100. Now, when we look at the weekly time frame, we can see that there is a marginal new high traded so far this week. The high traded at just under 6,100 is actually registered this past week. So unlike the Dow Jones with no new high, the S&P 500 remains on a tear. You can see that prices has been very, very bullish. So there is still no sign that the market is about to take a breather just yet. However, when we look into the daily time frame, this is what we are seeing. There is no sign that the market is about to reverse just yet. Okay, the high traded incidentally was on Friday, 60,099.5. So this is definitely a lot more bullish than what we are seeing in the Dow. So with this, you have to understand that this market has been very, very bullish throughout the whole of this year, regardless of any kind of factor that may actually cause the market to flip. So far, the market doesn't want to flip for whatever reason. The market absorb all the negative news and continue to charge into new highs. Now, when we look at the Nasdaq has finally made its move. We can see that Nasdaq has not had new high for quite some time. Now, we want to show you the monthly time frame. So we can see that there is a new high traded this month. Okay, The high traded is 21,625.1 in the cash market. So this is definitely something that is playing catch up. Finally, after a big pull down to 17,238, the market has decided that it still want to join the party. Okay, so as far as the weekly is concerned, weekly remains very elevated. Okay, Friday was where the new high was traded. You can see the market has actually been very, very strong. So again, all three major equity index is exhibiting strength going forward. So don't expect the market to flip just yet. In the daily time frame, we can see that the market does not want to come down. Okay, the high is traded on Friday. So this is setting the stage for higher prices into the new week itself. So with US equity markets now out of the way, we will look at Europe. Now, earlier on, we did look at as usual, we will start off with the FTSE 100. Now, the FTSE 100 on the monthly time frame has not had new high. In fact, the high traded here was at 8,477, and that was in May. So we can see that for the last 6 months, the market has flirted with the all-time high, but did not quite manage to breach. Whether it will continue to breach remains to be seen, but I think inherently, I think the European markets are a little bit weaker compared to Wall Street. So if there's going to be any kind of negative or bearish kind of outlook, I think it may come outside of the United States. So when we look into the weekly time frame, we can see that the market is struggling, okay? And every attempt to go back into 8,400 has been beaten back with the most recently this week. You can see that this is a pin bar, suggesting that we possibly will see lower prices in the coming week itself. Now, when we look at the daily time frame, you can see the pushback, okay, was just under 8,400. So we can see there's a lot of offer above here. So this is setting the stage for lower prices as far as we're concerned. So won't be surprised if the market continue to edge lower. So this is the FTSE 100, which is the UK equity markets. Let's compare to the German markets. On the monthly time frame, you can see that despite the fact that the German economy is deindustrializing and is supposedly weak, we can see that equity markets in Germany continue to trade into all-time high. 20,427.1 is the new high for this index itself. So wait for the market to eventually show up on the chart, whereby right now the fundamentals and the technicals are not in line. So be a little bit more patient, waiting for the confirmation to come in, which it will eventually. Okay, so when we look at the weekly time frame, you can see that the week has closed on the upper end. Okay, and this is just showing us that we must allow the fundamental to eventually catch up with the price chart. Right now, the market doesn't seem to want to come down just yet. Okay, although there was a pullback to 17,000, but now you can see the market is back above 20,000, suggesting that buyers are still very much bullish in the marketplace. When we look at the daily time frame, Friday is where it produced an all-time high. So this is not a sign in which prices are coming down yet, unless, of course, the price take out the low, which is the Thursday low at 20,190. That will be a level to watch. Okay, so far for now, the market remains higher every single day, okay, for the past week itself. So this suggests inherent strength, regardless of the poor fundamental in which the market is operating under. Now we take a look at the European index. Let's take a look at France. Okay, I think I do have. Okay, I don't have it on this platform, but I was tracking the French. Oh yes, I did. The French markets. So we know the French government has collapsed. So that should usually invite sellers into the marketplace. So we can see that as far as the chart is concerned, again, the high was traded in May of this year, very much like the FTSE. So as far as Europe, collectively speaking, except for the German index, France and the UK FTSE 100 does exhibit the same kind of sentiment. Although the FTSE has been attempting to flirt with the all-time high, we can see that the French index did not. Okay, so this is actually telling us the French market is actually a lot weaker compared to, let's say, even the FTSE 100. So when we look at the weekly time frame, news came in that the French government has actually collapsed, did not cause the market to collapse in terms of the equity market. In fact, we saw a very strong rally this past week in the French index, which is the CAC 40. Okay, so this is again going against the grain, but we can see there is already a first leg of this downtrend in the three-wave pattern. So I suspect that this is going to end up as a larger three-wave targeting something much lower. If we're going to see a bounce, this could be a counter trend three-wave bounce, and if it can go up to into this shaded area here, which is at 8,068, then I think it will start to look very attractive to be on the sell side of this market. Now, if you are tracking the CAC 40, this will be the outlook that I think may actually pans out. Okay, so in the daily time frame, Friday saw the rebound actually accelerated to the upside. Okay, so again, this is going against the grain as far as the fundamentals are concerned. Now, in the other European market, which is the Euro stocks, which is like I always mentioned, it's a combination of both the French and German listed companies. We can see that this week, this past month, we see that the market has a bit of a bit of a bullishness built in. So on the weekly time frame, we can see weekly. This week has also saw a very strong rally after the market has found some kind of bottom over the last 3 weeks. So this week's performance, with its closing very near the upper end of the trading range for the week, suggests that there is possibility that attempt to actually try to take the market higher. Again, all this is anti-climax as far as I'm concerned, because the fundamental does not justify such elevated equity markets behavior. So in the daily, let's say the daily time frame, okay, in the daily time frame, we can see 6 consecutive days of gains. Okay, beginning with last Friday, the Friday before last. Okay, we can see that every day has been positive. So there is no sign the market is going to fall back down just yet. But on the daily time frame, the market is already in that what we call a very deep retracement area. So as we go higher into this bracket of prices, between 5,000 to 5,001, watch out for some kind of reversal signal, something like this. Okay, if you see on the daily time frame a big move like this, then it will suggest that a temporary top is in place. So having watched Europe, let's take a look at Asia. Now this is the Nikkei 225, and I want to show you the monthly time frame. Okay, over the last 3 weeks, 3 months or so, we can see that Nikkei has been caught within an inside bar. We had one inside bar last month in October, and this month for the month, for the month of November, we have an inside bar relative to October. So far, December has still been trading inside the trading range of November. So we have an inside bar of an inside bar. So this could be showing us the market is consolidating, looking to a breakout eventually. So the market is right now is compressing. Okay, just like a spring, if you compress it, eventually when the energy is released, okay, when the spring is released, the energy will prepare the market to be very explosive one way or another. So we want to watch how this thing expand, okay, in the daily time frame. So we want to look at a weekly time frame. So the compression you can see here is very, very evident, okay, between 37,400 to 40,100, you can see the market has been compressing for quite some time, and it may actually explode to one way out to one side. So we will have to watch how this thing develops in the daily time frame. So the consolidation here is even more obvious, okay? Between the 37,600 all the way to 40,273, the market is compressing. Okay, so far it is 3-way up, 3-way down. So it looks like for a time being, if it doesn't break above 40,273, it may offer a short-term selling possibility. But again, watch out for explosive move. So what you want to do in a case like this is to draw. Sorry, let me do this. Okay, the market has been doing consolidation like this. Okay, so the easiest way is to mark out this. Okay, so is this going to be part of a flagpole? Okay, and if that's the case, there's a possibility the market may explode to the upside. So we will have to watch this development as they unfold. In Hong Kong, let me see Hong Kong. There's not much change in Hong Kong as far as the Hang Seng is concerned. The market has been coming off for the last 2 months. This month is there's a bit of a consolidation. You can see that the bar for the month so far is very, very tiny. So it means that the market is waiting for some kind of direction, and it is still not evident yet which way it will go. Okay, in the weekly itself, the market has actually reached a high of 23,264, pulled back very deeply to just to touch just above the 19,000 and then bounce. So for the last 2 weeks, for the second week in a row, we can see that the Hang Seng actually closed positive, and this is in anticipation of some kind of stimulus package in which the market participant is actually anticipating China will be rolling out just when Donald Trump returns back to the White House on January the 20th. So I think the Chinese are keeping their powder dry and to see if there's going to be any escalation and how the escalation in the trade war between China and US is going to unfold. And I think they are getting ready to take out the bazookas one more time to actually to support the markets. So there is a lot of hope that the Chinese government will be holding on to their stimulus package until perhaps in January. So we have to watch this. And the market is getting very excited about this. On the daily time frame, you can see daily time frame market has bounced, but it's very, very cautious. You can see that not a lot of momentum behind it, but at least the bottom is currently in place at 19,036.4. Okay, but very, very shallow bounce, always in danger of a break. So in a situation like this, the easiest way to trade is to draw a support line below this. This is a very simple way to look at markets. And if I want to expand this, you will notice that the moment the market closed below this simple support line here, technically speaking, the market will be continuing its decline from 23,264. Okay, and immediate target will be this bracket of prices between 16,426 to 17,900 thereabout. So equity market is out of the way. Let me see if there's any question from you guys. All right, there isn't any just yet. Now, with that out of the way, let's look at currency, okay? I was expecting some kind of move in currency market, but it did not quite pan out. Okay, we can see that this is the euro dollar. Euro dollar, you can see that the market hit a bottom at 1.0324, and that was 3 weeks ago. And the market last week was actually positive, closed on a positive end. But this week, the market actually went higher than last week's high, but closes slightly as a doji. So the market is unsure which way to go. Okay, as you can see, I've taken up a tentative long position here. So hopefully this position will survive. And we will look at the daily time frame. So this is where the market comes from the very deep retracement level between 102.20 to 103.96. So within this area, the market has actually bounced. Okay, actually I came in a bit late for this move here. I didn't buy within the bracket here, but I was waiting for some kind of confirmation. When it finally came, I pulled the trigger, the market actually went higher, but it didn't sustain. Okay, but right now it is still marginally above my entry price, so I could actually if I want to play safe, I could actually uh, uh, close a position on Monday and see what the market does. Okay, I've actually taken up two positions, one in euro dollar and the other one is in dollar Canadian. Dollar Canadian is not working out, whereas the entry for euro dollar is not as bad. Okay. Now let's take a look at the other major pair, which is the sterling. On the weekly time frame, you can see that the sterling has rebounded. Market has actually been falling from 134.34 all the way down to 124.87, and over the last couple of weeks we did see a rally attempt. This is slightly more positive than the euro dollar because on a close basis this week you can see sterling closing marginally higher than the previous week closing, so it is on balance definitely a slightly better performance compared to the euro versus the dollar. But by and large, if you look at this bar itself, it is a sign of uncertainty. The market is more like a doji. Okay, so it doesn't tell us very much about this current sentiment. It is basically indecision. And when we take a look at the daily time frame, when you look at the daily time frame, it's quite obvious the profit taking came in late on Friday as the market hit 128.11, and then it closes on a weak note relative to Thursday's closing. So this actually bar, this bar here is a pin bar. So it suggests that going forward in at least the first 2 days of the coming week, we may still see lower prices for sterling. So that will mean that my existing position will not be yielding a nice profit just yet. Okay. In the dollar versus, actually the one I want to show you is this one, dollar Swiss. Now for last week I did mention dollar Swiss. Dollar Swiss is currently in a stage whereby there is the possibility that the Swiss National Bank may find itself at the receiving end of the carry trade. We all know that interest rate difference between the Swiss National Bank, which is currently at 1%, and the Bank of Japan at 0.25%. We can see that the Bank of Japan's, the sentiment in the as far as Bank of Japan is concerned, is that they are more likely to be hiking rates. Whereas the Swiss National Bank market participant expectation is that they will continue to cut rates. And if this continues as what the market expects, that means the interest rate differential between Swiss and Japanese interest rates will actually narrow. And it may come to the point whereby the Swiss franc may find itself to be the carry trade currency instead of the Japanese yen. So if that's the case, we could see continued weakness in the Swiss franc. So do watch out. This rally in the dollar versus Swiss may not be over. I think this pullback that we are seeing over the last 2 weeks or so may eventually see the return of buying interest in the dollar versus the Swiss if the Swiss National Bank continue to cut interest rates, and whereas the signal coming out from the Federal Reserve is that going into 2025, they may be slowing down the interest rate cuts trend. So that being the case, all things being equal, it will definitely favor the dollar versus the Swiss franc. But again, I did mention Swiss franc may find itself to be the choice among global money managers to use the Swiss franc as a currency for doing the carry trade, very much in the same mode as the Japanese yen. So that would means there is that pressure to sell the Swiss franc, and that could actually create the sentiment going forward. Okay, so do watch out for this possibility here. Okay, I don't have a position in the dollar Swiss just yet, and dollar CAC is where I have a position. So we can see dollar CAC on a weekly time frame has been very, very strong. I was expecting this to happen. We can see that last week the market ended up as a pin bar, a high of 141.80. This is causing me to think that we are going forward, we could be seeing lower prices. However, we can see this market actually end up on a close basis, the strongest we have ever seen this year. So maybe I'm wrong, but technically speaking, this is still an inside bar relative to last week on a weekly time frame. There's still no immediate danger to my short position. You can see that I'm taking a short position, a tentative short position. Let me see the daily. Prices right now is in that very deep retracement level. Okay, so on Friday, we have a major run up in the dollar. Okay, so that's caused the chart to look very, very bullish right now. Okay, again, technically, if you have no position, maybe you can consider doing what I did. Basically, which is take a counter trend view because of that pin bar that we saw on the weekly time frame, very similar to what we see in this particular bar here when the market hit 141.78. Okay, so technically market could still flip around, but I'm going to hold a position. I already have a stop in place, which is actually quite nearby, so hopefully I will survive this stop here. But however, if the market do take up 141.58, 78, that means technically I am on the wrong side of this market. And if I survive this stop, maybe I will try to get out with as minimum damage as I can. Okay. So dollar yen. This is dollar yen. You can see dollar yen have a massive rundown last week, and this week the on a close basis, it has actually rebounded somewhat, but it is still very, very tentative. Now, this dollar yen move suggests that market is pricing in the possibility of an interest rate hike by the Bank of Japan. Okay, because when the dollar comes down, it means the yen has strengthened, and this is where we want to watch because the low traded this past week was 148.65. So this closing doesn't tell us anything just yet, but if we go down to the daily time frame, This is a daily time frame. Again, the daily time frame doesn't tell us a lot of story just yet. You can see that the market is boxed in between the lower end of 140 to 157. So long as the market is within this 1,700 pips range, I think the market is going to be trading sideways more or less, higher to sell, lower to buy. So right now it is in the middle of no man's land. Watch how the market reacts in the coming week. Okay. Right, I'm done with currencies. Let's move on to commodities. Let's take a look at gold. Now, on the weekly basis, you can see gold has attempted to rally. 3 weeks ago, we can see the rally actually has a very robust closing. However, there was no follow through buying the week before and this past week. So going forward, I think there is a possibility of a continuation weakness in precious metals all the way to 2025. At least in the beginning of 2025. So you cannot see very clearly on the weekly time frame, but if I show you the daily, it may actually be showing us a pattern here. So this is the daily time frame. You can see that the market is possibly doing what I would consider to be a three-wave pullback. And if it's a three-wave pullback, the low that we see at $2,536.80 may be revisited and maybe even surpassed. However, this is seen to be a correction within a very bullish market. Target is about $2,468. Technically, this will be the level to watch if we have a three-wave pullback from the high of $2,790.09. Okay, so going forward, I do suggest that it is a lower to buy market. So for a time being, should you sell? I won't sell, but I will allow the market to drift. And once the market drift down to near 2,500, I will be on the lookout for reversal pattern. By the way, the latest news is that in November, the Chinese government has resumed buying physical gold after a 6 months absence in the marketplace. So if the Chinese government is back buying the dip, maybe we should also do the same. Okay. So as far as the other precious metal, which is silver, is concerned, now silver has a slightly different structure compared to the gold market. We also see no follow through in the buying here. Market peaks at $34.85, has been pulling back since the market has gone to a consolidation very much between $30 and $31. Very, very narrow range of $2 thereabout. We can see that this is the weekly. Let's go down to the daily to take a better look at this internal structure. There is no sentiment here. The market has gone sideways basically. Okay, like I said, the low end is about $29.67. The high end is $31.52. So the market right now is hitting some kind of a ceiling pullback on Friday itself, and it may continue to muck around for in a consolidation patterns all the way into 2025. Okay, right. What about oil? Now, oil has actually been sold off again this past week, with the bulk happening in the last 48 hours of the week itself. Okay, so we can see prices is still on the lower end. Okay, I'm still holding on to my long position. As you can see here, I'm looking to add on to the existing long position if the prices continue to trade lower. Okay, I'm still very much bullish on the oil market. I will be looking out for reaction to the energy markets after the news that Syria government has fallen, and we want to see whether that will impact the market in any way. Okay, now Syria is not a major producer of oil, but it is still an oil producing nation nonetheless. Okay, we want to see how the reaction pans out here. So technically speaking, the market is looking to be very attractive to do that buy the dip. Okay, and on the daily time frame, this is a daily. We can see that the sell-off accelerated on Friday. The market was weak already at midweek, although there was a rally attempt, but it didn't quite manage to hold on. Right now on the daily time frame, the market is back within these very deep retracement levels, which is quite ideal for buying the dip. There is one question here. Let me grab this question and see if I can answer. Oh, Aussie dollars. Okay, thank you very much. I must have missed out Aussie dollars. Let me revert back to Aussie dollars. Now, this is the weekly time frame for the Aussie. The Aussie is on the back foot. Okay. The major number that came out of Australia this past week has been retail sales as well as the trade balance. Trade balance has improved, but the market sentiment is suggest that the fact that the the Reserve Bank of Australia still does not want to cut interest rates is a bit of a concern for markets because the economy is definitely struggling. And between economic growth and inflation, I think the priority now has shifted, or I would say shifted, I think has been more or less in the fight the inflation camp, whereby any kind of interest rate cut is seems to be inviting the flare of inflation all over again. The longer the RBA takes to cut rates, uh, when you compare that to their immediate neighbor, which is New Zealand, which is cutting interest rate very aggressively, that is a contrast. Okay, that is showing that the Australian economy is still pretty weak, and we can see that in the currency itself, the Aussie has actually bounced back. Okay, when we compare the Aussie on the weekly time frame, the other major currency pairs such as the euro as well as sterling has actually seen a bounce, okay, but the Aussie actually did not. So that is showing a comparative weakness in the sentiment in the Aussie markets. So I will show you the daily time frame. The day time frame now continue to see weakness going into this market itself. Now it is threatening to take out this low at 0.63 half. If the market do break below 0.6348, it will actually exacerbate the bearish outlook in the Aussie basis the daily time frame, because if the market do trade below 0.6348, I will have to eliminate all these green boxes and leaving only the other boxes which is negative. Okay, the market did do a three-wave bounce. Technically speaking, it has technically fulfilled the bounce story. So if this is a bounce, seem to be corrective, then the larger market it is down. Okay, so the market larger sentiment, the bias is to the downside. So that is the inherent weakness in the Aussie going forward. Hopefully that is good enough for you, Suman. Jim is asking, may I know what is my view on natural gas? Okay, let me show you natural gas. Natural gas right now is still very, very tentative. There is no sign that big buyers are in the market just yet. We can see the on the daily time, on the weekly time frame, the market has bounced off, but this bounce off is happening on the back of a three-wave bounce, not a very strong and very convincing that bullish sign here. If I do this, you'll notice the market hit 100% exactly here. Okay, yeah, marginally above. Market was the equality levels was $3.57, and the high traded here was $3.61. So marginally above, but by and large, it is very clear this is a three-wave bounce. The larger bias is down. Okay, so there is the possibility we may see lower prices in natural gas going forward, okay? But that could change very quickly once Trump gets into the White House, because Trump wants to encourage the exploration and the production of fossil fuel, including natural gas. So that could actually underpin the market. Okay, and of course, Donald Trump will also be under pressure to replenish the strategic reserve, which President Biden has been drawing down. Okay, so again, at the turn of 2025, assuming Trump managed to get into the White House again, okay, it is still not a done thing yet. Okay, a lot of things can still happen over the next 30 days or so. So if this is the case, then the return of Donald Trump is actually seen to be a little bit more bullish on energy markets, including natural gas. So that's my 2 cents worth. Any other questions? Hopefully that answer your question. Okay. On the daily time frame, you can see that the natural gas has not seen the buying interest that we are hoping to see just yet. Okay. Yes, prices has bounced off. Then even on the smaller scale, earlier on I showed you the three-wave bounce in the weekly time frame. So even if I extend it up here, you'll see that this is equality move. Yeah, you can see here. This is the equality move, three-wave bounce. So this is not a good development for a bullish case. But nonetheless, there is currently a counter trend in place. It may be a simple three-wave bounce and then continue to trade lower. Once the market do take up $1.73, it will suggest that the longer-term bear trend has resumed. Okay, but how much lower can it go? Is already mid $1.70. So I would think that unless you believe natural gas can go to zero, so I would think that it is logically a lower to buy market. But again, we have to see, we got to look for sign that the buyers are in big time. Right now, there is no sign that can convince me that the big buyers are in the market just yet. Okay, but we can see that this bounce here end up in the equality move, which is a very bearish development. All right, I think the market continues to be very exciting in the digital asset space. Let's take a look at Bitcoin. We all knew Bitcoin broke new high this week, right? So we can see Bitcoin traded to a high of 100,000, 104,000, which is the most we have ever seen. Okay, so there right now there is that euphoria. Now, one thing that I have to mention is that this rally that we see in Bitcoin is very different from the previous rally in previous years, because this rally has been led by institutional players, not retail players. The institution players led by all the ETF, the spot BTC ETF has been behind this rally in digital assets across the board. Not only buyers in Bitcoin, they have spilled over to the other altcoins. This week we can see big move in Tron, big move in Dogecoins, big move in Litecoins. So they are all moving across the board. Okay, so do watch out. XRP has been in the news for the last few weeks because of that confirmation that the current president of the SEC has resigned. Okay, and he's going to stick around until January the 20th. But the fact that he has tendered is actually seen to be bullish for more for Ripple than any other coin, but it does seem to spill over into the other altcoins here. So as far as Bitcoin is concerned, we can still see that the market remains very buoyant. Okay, this is the weekly time frame. You can see the market is like a cobra reeling its head. Okay, so there's still no sign that the market is going to come off just yet, but on the daily time frame, I'm beginning to see some kind of profit taking place. You can see the daily time frame. There is already sign of some kind of profit taking. Okay, there's a pullback here. Okay, market now is trading just above 101,000. So that could put the market on a very vulnerable spot for at least a near term. So we will want to monitor this. But again, when we look at this individual bar here on Friday, okay, this is actually a very bullish development. So it's a bit of a contradictory. Okay, if you believe that the market has hit the nearby top, I think you have to watch out. But I think the top for Bitcoin will probably come somewhere higher, maybe 125,000 for all I know. Okay, so but going into the first quarter of next year, you for those who are still long on Bitcoin, you want to be very concerned, because I think anything above 125,000 is going to make it a bit of a difficult sell. Okay, there may be more there'll be more profit taking going on if the market managed to clear to touch 125,000 per coin. Okay, so that will be my gauge. I think in terms of time frame, I'll give it another maybe all the way to March, maybe even April. So going into the first quarter of next year is going to be possibly an extension of this move that we are seeing. If there's going to be any kind of near-term pullback, we can see it perhaps as a near-term pullback. Now, you look at the daily time frame. Oh no, we want to look at the 4 hours. 4 hours, we see a bit of a pullback. So overall, if this end up as a three-way pullback, this area here, anywhere between 85,000 to, let's say, the high of this range is 88,000. Anywhere between 85 to 88,000 would be a great area to pick up some more long position if this end up to be a three-wave. Okay, so not sure whether that will pan out. Okay, but if it does, this will be a good area to actually accumulate more position for another run up in prices towards the $125,000 per coin. Let me see if there's any further question. Tanvi is asking, given market will be a little quiet post-Fed announcement, meaning liquidity may be lower. If so, a good time to exit market and start afresh from next year. It's always been the case every single year. Money managers will want to book in their gains to secure their bonuses for the year. So there will be some kind of profit taking going into, but because next week is going to be FOMC, and markets waiting for the final FOMC to before they will take profit. So I would suspect next week, middle of the week, is going to be the key highlight for the week. Incidentally, we're also going to have the CPI release into next Wednesday. So again, going into this week itself, I think the market may be volatile one more week before it starts to taper off nearer to Christmas. Once the market close next Friday, I would suspect going into the last 2 weeks of December, the market will eventually taper off. Volatility may actually slow down unless there's some external shock to the marketplace. That will be what you can expect, logically speaking. Okay. Right. Beyond Bitcoin, let's take a look at Ripple. No, let's take a look at Ethereum. Okay. Ethereum on the monthly time frame, you can see the monthly time frame has been very strong. Yet Ethereum is nowhere near all-time high. Okay, Ethereum has been the underperformance, so to say, but it has actually caught up last month. Okay, and this month we can see higher prices. Right now, it looks like it's going to challenge this high that we saw here in March of this year. Okay, at 4,100. 4,900, $4,090. So the market high so far this week is $4,086. It looks like it may actually surpass this level into this bracket to challenge the $4,860 per coin on Ethereum. So Ethereum still has a little bit of upside because it is not seriously overbought yet compared to the other coins. Okay, so maybe there is some kind of opportunity here for those who wants to trade the laggard. Okay, in this case, the Ethereum seems to be the laggard. So I think very likely we will see market take out this $4,090 going forward. Right, and let's take a look at Ripple, which is, I think the market has been reacting. Remember, I did post on my Facebook, for those who follow me on Facebook, I did mention that the market has gone parabolic. And this has been largely the case because of news that the SEC chairman has actually resigned. And that has seemed to be a very bullish thing because for some reason, the SEC chairman is very hard up about Ripple, and Ripple has a ongoing litigation case or a lawsuit. They actually sued the SEC because the SEC claimed that they are operating a security without a security license because the SEC stand is that Ripple should be seen to be a security when they were inviting people to subscribe to the coins to the ICOs. Okay, and it has been a long going ongoing cost, okay, lawsuit, and the removal or the leaving of the SEC chairman seems to be a hawk. And has finally released the cap. We can see the pent-up demand for Ripple has been quite dramatic. It's almost 90 degrees. So I think the sentiment will still continue to favor Ripple. Ripple has been uh, actually reaping the benefit of this move here. On the daily time frame, we see a bit of a pullback, but if there's going to be a pullback, again, look at it as a three-wave. Any kind of three-wave pullback will actually warrant a long proposition, okay? Because we can see from the monthly and the weekly that this market is definitely on a tear. This is the weekly time frame. This is parabolic, okay? So this market here, there is no doubt that this market is bullish. So if we have a three-way pullback in the daily time frame, that could be seen to be a possible corrective pattern. Look out for a classical three-wave. If this is the high for this bounce here, take this as a three-wave extension. You do this. And if that's the case, assuming this is the high, we could be looking at $1.86. And that is a good area to consider buying some more, okay, or rather to reaccumulate long position in Ripple. Now, beside this, the other markets that has also become very interesting. Now, remember the news story about this guy bidding $6.2 million for a banana at an art exhibition. The guy is the owner of Tron. Okay, so you can see Tron has also somehow caught on to this move here. But you can see the profiting has been a lot more severe. It has lost 50% of what it gained. The high traded was 44 cents. So this is a meme coin, okay? I don't think it's going to be amounting to much. So this is more speculative than anything else, okay? Whereas Ripple has actually uh, use case basis, whereas Tron does not seem to have any kind of blockchain that is of any use in the real world, okay? I may be wrong here, but again, I think this is more a speculative meme coin than anything else. So if you are into Tron, just be aware that the market has lost back 50% of its gain recently. Okay, so this past week, the market has come back to the midpoint, currently trading at 31 cents. So I will not be doing anything with this coin here. Okay, there's possibility it will lose back everything back into this area here, for all I know. All right, guys, this is all that I have for you for this week itself. Now, there will be 2 more weeks of a presentation for my weekly market rate. And for those who are in Singapore and who are a client of Charles Schwab, previously known as TD Ameritrade, just know that I'll be giving a talk on Wednesday evening between 7 to 9, I believe. Okay, so if you happen to be in Singapore and if you happen to be a client of Charles Schwab's, you can actually register to attend this talk, which will be held at Conrad Singapore. So this is a physical event. It's free to attend, provided you register for the event. I don't have the link because they didn't forward to me a link. But if you happen to be in town and is a client of Charles Schwab's, you're more than happy to attend this presentation here. TRX is a USDT transfer chain, maybe. I'm not too sure about Tron, okay, but to me, it's a very speculative coin compared to the others. Okay, yes, it could be part of the blockchain that allows people to change into a stable coin. But again, yes, it is. I think I have received some stable coin on this blockchain before. Yes, it does. So the thing is, it's not a major coin. Okay. All right, guys, thank you very much. And I hope to see you guys next on Wednesday on December 11 at Conrad Hotel, which is opposite Suntec Convention Center, if you happen to be in town. Okay, guys, and I thank you all for your patience and your attendance and your support. I'll see you next Sunday. Bye-bye.